Hello traders, welcome to Polaris Trading Group's PTG University Educational Workshop Series, and today we're going to do a short video on combining discounts with number bars that are located within Sierra chart. The chart type today that we'll use is a 750 tick along with a 6-tick reversal footprint chart, and the trade date for today that we'll be taking a look at is June 18th 2015. So the chart types that you see on the screen here now are a 750 tick on the left hand side panel and a corresponding 6-tick number bar reversal chart on the right panel. So let's just start off here on the left hand side. We'll take a look at the traditional chart that we look at, and this cyan color heavy line here is the opening range rotation midpoint. So this particular trade opportunity occurred just shortly after the opening, and as you can see, price pushed up pre-opening and then found a little bit of temporary resistance about the 2102s and then pulled back in a little zigzag fashion here, and which produced right down into the opening range rotation midpoint. It produced our classic discount, but in strengthening conditions. So a discount within the context of strengthening conditions is the core criteria what we're looking to enter on. And what we want to reference here is the high of the alert bar price, and that's approximately at 2101 actually. And so once the pullback has run its course, which simply means that the pullback in price has formed our discount, the sellers that have come into the marketplace to retrace price down, new buyers step back into the market, absorb those sellers, and then once those sellers are completely purchased, the buyers go on to buy it above the alert bar high, and profitability in terms of buying that discount. Now the discount here on the left hand side is the traditional look, but what we want to do today is combine that traditional look with the number bars format, also referred to as the footprint chart, which is simply a times and sales of price in number bar fashion. So if we do a crosshair, we take a look here at this price point where the discount formed, the alert bar. You can see on the right hand chart approximately there's 2 columns there that where that discount formed. So let's just move over to that column. So you can see here, actually let me just squeeze out the chart just a little bit here. You can see how the price, again as I described in the chart, moved higher, alright, and then simply pulled back here in this ABC type fashion. So very similar look, holding the opening range rotation midpoint. So now at this point, what we're looking for on the number bars is we're looking for evidence that the sellers that have pushed price back down to the opening range midpoint have been absorbed by the buyers, and then the buyers regain dominance. So again, the walkthrough is buyers pushed it higher and now started to take some profits. Price got a little bit extended and a pullback to the opening range. So what we're looking to do simply is identify the location of which, when the buyers come back in, the sellers are complete, we want to enter our trade. So this, using the number bars, can help confirm what we're seeing structurally in the discount. So if we take that discount reference price, and that's approximately just a shy under 2101, and we corresponded here to these bar columns on the number bars, we'll see that approximately 2101 is where we got a 6-tick reversal shift off of the low price column. So 1, 2, 3, 4, 5, 6. So we get a 6-tick reversal right into the 2101 quarters, and effectively that would then create an entry trigger, regardless of whether you're looking on the traditional discount chart, 750 tick, or the new number bars. But with the number bars, what you're seeing here is you're seeing that the sellers got absorbed. In other words, the sellers that pushed it down are very light on the buy side, on the sell side at the lows. And then the buyers start coming in. You can see the imbalance here, 376 versus 98, 1600 versus 700. So there's 2 times the imbalance, and then the price buyers started filtering deeper into price at this point, and then shifted the columns 6 tick higher off the low. And then once we get that 6 ticks reversal up off the low, then that's when we can start buying into the new buyers that have come in. So what this tells us is that sellers are done selling, buyers have regained control as they had early on, and then as you can see, what ultimately happened is further buying stepped in and the prices went higher. So the discount is where we want to buy a pullback within the context of a developing up move, and by using the number bars we can pretty much pinpoint and see inside what's happening in the tick bars. Again, we don't see volume inside the tick bars, but we see that structure. And what we do see here in the number bars is that corresponding buyers stepping back in, regaining control after the sellers had pushed it down and the buyers absorbed it, and then the buyers step in and price goes higher. So this is a way of combining the discount and the number bars. You don't have to, but those that are interested in learning more about how to use the number bars as a way of making a more informed decision when you see a discount or a premium form, or at a specific price point, for instance, you can certainly use the number bars in this very same way. Okay, so I hope this little short video helps, and we'll be doing more of these from time to time to give you some specific highlights and tips of what to be looking for at specific junctures with our trade setup and opportunities. So I hope you've enjoyed it, and good trading to all, and we'll see everybody at the next short video update tip.